record. And I'll hand back over to King.
Perfect. And one of the other things too, to obviously what we talk about today can be quite general. I do want you to sort of relate it to your own business, but part of the offering is a one-on-one consult with me sometime in the next couple of weeks, which is where we really can dive down into some more of the nitty-gritty that relates to you guys individually. Okay, so just keep that in mind. Realistically, what I want to talk about today is in our business is exactly focusing on what matters. So obviously we know there's a hell of a lot of noise in business, and it's putting our effort into what matters. So we don't want to be taken away from family and all the rest of it, butting our heads against the wall just for the sake of making ends meet as such. So we want to think about what we do as a business. A lot of people, we're in the industry because we enjoy it and that's what we want, but we do want to be rewarded for that. So that's where we sort of tailor in a different way of thinking. And it's good just to sit back on the business and look over it. Times like these are definitely valuable. So basically, you guys can see that screen all good? Nice. Actually, I think that's, sorry, just having a few little dramas here.
Would it be a Zoom call without technical issues?
Right. Okay.
I mean,
you can see the first screen, Hannah?
We can, yes. Yep.
Yeah, cool. It's just not wanting to click through for me. Cool.
Hey, there we go.
Yeah. Perfect. So quick spiel, just everything we go through today is obviously general in nature. Quick disclaimer there. So don't run off and do stuff without having a chat to myself or your accountant. Cool. A little bit about me. So I'm an accountant, business coach here at Costco. I've been here for over 14 years now. So I started off as a trainee while I was working through uni and been here ever since. I'm based in Ingham. So for those of you who don't know, that's 100 k's north of Townsville. We branch from Innisfail, Ingham, Townsville, and we've also got an office in Brisbane, Springwood. So I head up the business development side of things, as well as doing my role as an accountant, obviously doing tax and financials and that side. But I generally, a lot of my time is on the business coaching side of things. And I guess more specifically, in 2019, when I purchased Tweak Fitness Ingham, I've been fortunate enough, obviously, with my experience in the industry, to be able to tailor the advice specifically to people like yourself. So obviously working with Fitbox in the academy has opened things up. But before that, I guess using my experiences in the fitness industry as well as the accounting industry to put those two together. It's well and good to speak to an accountant about the numbers, but what they don't understand is how the industry works, and it is different to most small businesses, as you guys know. So kind of what sets me apart from most is having skin in the game, feeling what you guys feel in terms of cash flow, in terms of numbers, in terms of kickback and complaints by clients and all the rest of it. So when I'm talking with people, I like to go that little bit step further and have a deep dive into those type of things. One of the things when I bought Tweak Fitness Ingham, my plan was to fit out a health hub, which is now known as Ingham Health Hub. And so the idea was Ingham's only a small town, just over 4,000 people. The idea was obviously to create a hub where we've got allied health services. So I've got a physio, cafe, occupational therapist, massage, speech pathologist, ex-phys lawyer. We've got some psychologists working from there now. So the idea was bringing these services together. There's a lot of interrelated clients. So the model is something that, I like and definitely encourage people to do. In terms of going through the whole setup from, trying to budget and do your due diligence on a project like that, experiencing where the blowouts can occur, which is with any business, let alone sort of projects like that. I'm now working with three others on the run who are looking at similar type setups. And yeah, like I said, using the accounting knowledge to link in with the industry specifically. So that's me in a nutshell. Once I get this to do its thing again, so a couple
We can
photos.
we can add in also that Ken is a very keen CrossFit athlete himself. He's currently kicking off a very highly credentialed open campaign. Just
I don't know about that too much. We'll see after the weekend how much it hurts. But yeah, so enjoy the industry too. So the passion's there, and no doubt you guys have got passion in the industry. My thing is to make sure that we're getting rewarded for what we do. Couple of pictures here. This is what I started out with. So I did buy an existing gym that was at a different premises. This is the building that I've was to fit out as England Health Hub. I worked very closely with the physio because that was kind of my safeguard in terms of making sure they took up enough space to help me make it viable. Basically, that's where we took it to. Spent a lot of time and a lot of money in terms of the design, but the idea was to, on the left here, we can see as you walk in, you're in a main foyer. There's tables and chairs and that there now, cafes to the right, is that you're not feeling like you're walking into a gym. We wanted people to be comfortable and use any of the services without being worried of walking into a gym first up. Top right, obviously got the gym, and bottom right's pitch from the outside, which looks a little bit different. We've got a seating area out the front and so forth. So that's kind of the model we used, and has been working quite well. Since then, we've taken over we actually bought out the other gym in town. So the space on the top right there is actually a lot more cluttered up now because we've merged the two together. Enough about me. So what we're going to go through today, we're going to have a quick look at why businesses in our industry fail. Some of these things may keep you up at night. Some of these things, will be in the back of your head throughout a day. I just want to go over the things I see with people that are struggling and make sure we don't fall into those numbers. Talk about data and insights. So we know there's a hell of a lot of data out there just in our own systems, let alone, benchmark reports and all the rest. And there's a hell of a lot of insights we can take from it. I'll talk a little bit about how we sort of focus on what matters to our business directly. And I'll get you guys starting to think about the things that matter specifically in your business and start setting some direction in where we move to get the most out of what we're doing. So it really brings us to starting to set KPIs, key performance indicators for ourselves, setting some targets. The biggest thing is, it's all good to set those targets, but how do we track them? How do we at any point be able to track it live? We don't want to look 6-12 months down the track at numbers when it's too late. So I'll talk a bit about live tracking, and then being able to obviously evaluate past reports and understand those numbers. A little exercise where it's exactly, are you where you want to be? So a little exercise into where we currently are today, whether that's 150 members, 200 members, where we are in terms of revenue, and where we really want to go. And a couple steps to, I guess, using the academy to at least make the change, take a step in the right direction. Cool. Any questions so far? All good? Nice. So quick question on why businesses in our industry fail. So have a little bit of a think. These are probably things that scare you. But I guess my question is, if I was to ask a couple of people on why they think businesses fail, what do you think the biggest downfall that I see is? What about yourself, Matt?
Yeah, I mean, sometimes it comes down to obviously financial, like overestimate or underestimating the expenses. So like budget planning and all those kind of things. If they're choosing a premise, maybe sometimes getting something that's way too expensive for what their projected incomes are, not what they actually are. And then obviously having those safeguards in there as well, just in case. Things do, like, it's a very seasonal industry, the fitness industry as well. So experience probably comes down a lot of it in that regard as well.
Yeah, awesome. Seasonal's huge, and sometimes our emotions go up and down based on the season, but are we tracking to how we were this time last year? We may be in front of where we were at this point last year, but all of a sudden, we get a few members cancel and all the rest of it. If we're not looking at the right data, then it can pretty much take us off track when we don't need to be. And then on the flip side, you might think you're going great guns in a season or a period of time, but you're so many members or so many dollars of revenue off where you were at the same time last year for the month. So that's a great point. If we're to throw some numbers out here, what percentages of small business fail in the first 3 years of startup? What's your thoughts, Inshan? Throw a number out.
60%.
60%. Cool. Yourself, Belinda? Any thoughts? Percentage?
60.
Yeah, you guys are on it. Biggest killer is obviously cash flow. So what's crazy about these numbers is 60% of businesses in Australia fail in the first 3 years, which is absolutely massive. But what's more incredible is 50% of those businesses, if you looked at their financial statements for the full financial year, they actually show a profit, which is crazy, but makes sense when you look at it. So cash flow being the biggest issue is having the cash in the hand at the right times. Matt mentioned that, and knowing when we can, do the spend on new equipment, when we got to hold back and so forth. These people have committed to payments and they haven't got the cash in their hand at the right time. So part of the model, that we need to use is making sure cash flow is king. It's also, other opportunities that pop up in business, having the right amount of cash at the right time gives us so much extra power to do those things. It could be as simple as acquiring, a gym's closed up and you want to snuggle up some gear, make sure no other gym grabs it or whatever. If you've got the cash flow or you can quickly access finance, it may be a good business decision that not only gives you gear at a good price, it takes out a competitor. Okay, so it's the way we think. The other thing is exactly not understanding your true numbers. So we talk a little bit about understanding retention rates. So what percentage of members are staying with you, what percentage are dropping off. Understanding your monthly revenue. So like I spoke before, you want to know this information up front. We don't want to be doing our financial statements and then 6 months after the end of the financial year, we're comparing the last year with the previous year before that. We're already 1 to 2 years down the track. So if something's not working for us, it's already too late or we've had too much lag time. So understanding those numbers, tracking your running costs. Matt brought up the expenses of running a business. They're only price of electricity, all the rest of it, our margins are only going to get squashed. So I guess being smart, being able to know where we are in terms of our running costs, spending money and time on the wrong things, obviously a big killer, and having the right support team, whether that's your accountant, business coach, the actual coaches in the business, spending the time on the right resources, right team. People that miss the mark on that is where they're hurting. So a bit of a diagram here. As we've covered off, there's a hell of a lot of data out there and there's a hell of a lot of insights from that data. Where we want to play is try and draw specific to our business, what type of data, what type of insights are going to increase profitability and efficiencies in what we do. So pretty broad type way of thinking, but it's how do we get that data in a timely fashion and make a difference to where we need to go. So in terms of data, my computer does its thing. So data could be grabbed. So when I'm working with clients, we're looking to grab as much data as possible first up. So places we look is obviously your point of sale software. You've then potentially got an accounting software, whether that's Xero, QuickBooks. So that holds other information for us. There's industry benchmarks out there, right through from personal trainers to gyms to CrossFit affiliates. There's certain data we can access. 24-hour access systems. So in my gym, the 24-hour access system is actually a standalone system. So there's data we can look at with people checking in after hours. Social media has data. Overall, there's financial and non-financial data. So what I mean by that is financial data might be as simple as obviously, monthly revenue or monthly direct debits coming through. But the non-financial data might be, and I'll show you some cool graphs later, the number of, say, check-ins throughout a day. You might compare number of check-ins to, sales over the counter. There's certain things we look for. It might be when the bulk of the check-ins are coming through to make sure we do have someone at the counter, selling, making sure that they're ready to sell, renew memberships or sell merchandise. It's pretty, you can go to the nth degree, but just give you a bit of an example of the things we look at. Obviously customer surveys can be a big one. And then, right down to the understanding the health and wellness of members, whether that's via, particular apps, whether that's getting data from Garmin and so forth. So, we know there's data out there. What we talk about later is focusing in on exactly what matters to us and what's going to make our business profitable. The insights, I'll show you some graphs that we can tailor in on certain trends. So I'm looking for trends within my business that are going to give me an idea on where to dig deeper into what's hurting me or dig deeper into what's actually making me money. Okay. Same with the KPI tracking. So there's dashboards that I'll show you about once we set KPIs and we set these indicators for the business and targets, we want to be able to track those. So I'll show you a few dashboards that I use. Track and monitor the data live. So unless the data is live, it's no good looking 2, 3, 4 months down the track, because we want to be, obviously as onto it as possible. Weekly, monthly, quarterly reporting. So there's certain reports that people want access to. I've got general reports and then other reports where we want to compare how we're tracking against previous years or how we're tracking against the targets we set. Okay, so that's where we sort of set the insights. And to start giving you a bit of an idea on some graphs, don't focus too much in on the numbers, but this was taken some time ago from over a period of time for my gym, my conventional gym. So if I look down the bottom, this is a count of people checking in. So obviously it's over a period of time, so don't worry too much. But if we said, this was 5,000, 5,500 check-ins and so forth, grabbing a period of time, what I'm focusing on is numbers like, obviously, when's my major check-ins of people coming through. So I can see, that 8 o'clock mark, I've got high attendance. And then around that 4 to sort of 6 o'clock mark, I blow it out here. So where I take a little bit of a deeper dive, and if you think like a CrossFit affiliate, that type of graph's valuable to give us an insight in terms of numbers coming through the classes. Now, I know we've got access to this information, but what this may tell me is that if I have a look, anything over, a certain number in the gym at any one time may be actually hurting my loyal members, and satisfactions obviously could start to decrease, if that makes sense. So I'm looking for things that are going to disrupt my loyal members because I don't want to lose those. But then I also see big opportunities in time slots like this where the gym has plenty of space. So a couple of the things we've done after looking into here is Ingham, being a small town. Sorry, guys. Ingham being a small town, we've looked at and an older population. We've started to run some seniors classes. So what that's done, if I were to do another graph, is started to fill in the 10 o'clock time slot where we've started to run some senior classes. So it's using this to think about other opportunities and we've all spent so much on equipment, we've all spent so much on resources and all got so much space. So how do we maximize our dollar per square meter inside the gym we are is the general model. Or how do we maximize, so for a personal trainer, how do we maximize every hour of the day in terms of turning over revenue? So that's just a little bit of an insight on certain things that we look at. Any questions on that? Any thoughts? Make sense? Cool. This one here was interesting, and it's something that I probably would have liked to have seen before I made the offer on buying this gym. So what we've done is taken their software, and over time I've mapped out the check-ins. So down the bottom here we see May 2013 all the way through to November 2020. Okay, so this guy in 2013 started off his business. You can see, skyrockets in terms of check-ins. Over the first couple months, almost 6 months, we see that general increase, which I see quite often with gyms. And if I take from November 13 all the way through to November 18, I can see a slight decline. Now, there was the same number of gyms in a small town, but the actual check-ins has declined, and you can see a distinct movement. Yes, it goes up and down, but we get to here where this was actually when we purchased the business. So that type of information is if he was actually seeing that like that, alarm bells would start to ring. But once again, over a period of time gives us a true indication. From there, we took over. So, with the fitness industry, someone new generally can spark things. So we had that little bit of an increase. And where we had our big increases at this point here is when we moved into the new building that I showed you guys. So we had that spike from there, basically getting back up to when he started back in 2013, which is pretty cool to look at. And then obviously COVID come and got us, and we've got that decrease there. I haven't continued the graph as such, but that only goes to November. But they're sort of things that are quite cool, especially for you guys that have been operating the business for 4, 5+ years. Yes, our numbers are going up and down, but what's it doing in total? Okay. So I won't spend too much time on this one. Once again, looking at counts, the other thing we can map it out into is the counts per day. So put simply, if I look at the bottom line here of Monday, the higher the line is above there, the more check-ins. So I can always see Monday is nice and high. Tuesday's okay, Wednesday's okay. As soon as I start getting into my Thursday, Friday, Saturday, Sundays, that line drops as people fade away in the gym. And the other thing I look at is how all of these start to dip down towards November, December, which is something we know of. But once again, it's, well, how do I retain people throughout the week? What have I got to do to stop that dip towards the end of the year? Okay. So when we market and do things, we sort of focus in on those timelines of when we're starting to people to drop off. And it's kind of trying to be in their face or keep them motivated 1 or 2 weeks before we think they're generally going to fall away, just to be doing it at the right times. Once they lose contact with us and then lose that engagement, that's when this trend just follows to a T. Right. So from there, with come back to the circles, we know that there's a whole lot of things that matter in what we do, that matter in our business. We know there's a heap of things that we can control, but where I want you guys to focus and start thinking about today is the things that matter and that we can control. Right there in the middle is where we need to hone our time and effort into. Okay, I work with too many people that spend a whole lot of time on stuff that they don't need to. Takes it away from family, takes the enjoyment away of what they do. Give you an example, like as an accountant, I know I can do my payroll, I know I can pay my bills, I know I can do my bookwork. I don't touch it for the pure fact that my time is better spent somewhere else. It's better spent either running a CrossFit class. It's better spent walking through the gym. So it's finding that middle space to either get our lifestyle back or things that are going to drive our revenue and profits in the right direction. That makes sense. Am I talking, when I mention things about lifestyle and work-life balance, are they things that sometimes, I guess, do we feel like we're in that boat sometimes where the business sort of takes over, or we're spending time on things that aren't critical? Yeah.
Yeah, all the time.
No doubt. So quick exercise. I want us to start thinking about things that are important within our business. So these are the things that you believe are critical to your business, things that scare you. And I just want you to list 3 distinct things. We'll take a moment, jot them down. Look, ideals could be client retention. So you know, if you're losing 10% of your members every month or whatever, you're turning over a percentage, you want to reduce that. You want to increase your direct debits from, you know, $5,000 a month to $6,000 a month. Cash flow, 3 things, list them in order of most important. I'll give you guys a couple of minutes. And if anyone's got any questions, feel free to pop in.
While you guys are working through that, Keenan, I'll just let you know that Joel was able to jump on during that as well. Now, Joel is looking at opening a gym soon, so he's at the very early stages of planning and going ahead. So
Yep.
He may jump in with a question as well. So if you meet a new voice or see a new face just down there, there he is. Give me some thumbs up. So he's also. Sorry,
Awesome.
mate, I just spoke over you. Go again.
No, I said sorry. I am here, even if I wasn't on video or on mute for a second. Yeah.
Awesome.
Thanks.
No, we do love videos. It's a really difficult thing to host without reactions. If you are at all able, please feel free to leave it on. It helps Keenan a lot. Awesome. I'll leave you guys to wrap up that exercise.
Cool. We all got our 3 things. Does anyone feel comfortable just sharing things they believe are most important in their business? If they're just general ones, if they're specific, don't stress too much. What have you got, Belinda?
Yeah. Member satisfaction and retention.
Yeah.
Member numbers and member value.
Yeah, perfect. What about yourself, Matt?
Yeah, so probably first would be sessions per week. So just trying to keep that in the realm of working as little as possible with earning more per that time, which then falls into the second, which is value. So the more value I can offer people, the more essentially that price evaluation goes up of my time. But then, yeah, the third thing is probably definitely growth. So where like my goals are pretty lofty. So to do what I need to do in the next, few decades, I've got to start those processes now.
Yeah, awesome. Yourself, Inshan, got a few different to those guys?
Yeah, so for us, probably our most important thing was the quality of our staff.
Yeah.
Then customer engagement was another one, and then finally, it sounds bizarre for someone who's a business owner, but obviously cash flow.
Yeah.
Cash flow is the third most important one for us.
It's huge. I'll write that down as number 1 every day of the week.
Yeah.
And yourself, Joel? Anything different to that? Anything different to those guys?
I guess for me, I sort of briefly chatted to Hannah about this. I'm not needing to or looking to really derive a significant income from it, or it's not my livelihood. So I'm doing this almost as a profit for purpose type initiative, I guess. I'm passionate about CrossFit and I'm passionate about community. So, that sort of gives the game away there in terms of the 3 things that are important to me or us is doing things, I guess what I'm acutely aware of, doing things in a way that don't break me or the other people that are leaning in on this. In terms of, I don't want to have to live at a CrossFit gym from 4:30 in the morning through till 8 o'clock at night. That's going to break my family and everything else that's going on. Secondly, we do want to create maximum engagement and meaningful community, and that's super important to us. And then do so in a way that, and obviously it's primarily through CrossFit, and so we want the CrossFit aspect to be fun and safe and not professional, and so that invokes all the other aspects of good coaches and making sure we do things, we have proper methodology and CrossFit principles really well, but retain that fun aspect where the primary outcome or product that we're offering is meaningful engagement and community and a good coming together and being able to go deeper in relationships. But it just happens to be through the avenue of CrossFit, which is naturally primed to generate all those things.
Yeah, Yeah, that's cool. That's awesome. You know, I deal with some people, you know, a lot of different people on both ends of the spectrum, and definitely that type of vision is key. And profitability and all those other things will definitely come as a result of it. And you know, the more profitable we are, the more we can give back to our members on you know, all levels. So yeah, that's cool. Fantastic. So from there, I will do a quick poll. What I want you to think about is measuring these things in terms of, so we've got the 3 most important things. How well do we actually track them? So at any point in time, would you be able to tell me right now that you know exactly where you sit in terms of cash flow, revenue, whatever you guys said, be able to measure those things as to how well you're doing at any point in time without having to dig down and find the numbers? I know I definitely wouldn't be very satisfied, even though I'm in the game. So what we'll do is a quick poll, which I think should work. So if I launch this poll, 1 being not satisfied, 5 being very satisfied, somewhere in between there on those things. Just going to launch that now. You guys see that? Cool. I think we got 1 or 2 more. Nice. We got 3 in. Is it working for everyone?
I'm not sure if Scott's still with us
Gotcha.
or if it's counting me.
Sorry, I just get a text to everyone saying I'm going to abstain from voting, given I haven't really fully launched yet.
Gotcha. All right. So basically where I thought we're about a 2 and a 3. So you guys can see that there. So no one is very satisfied. No one's, you know, we're about moderately to closer to not satisfied side of things. And it's interesting in the sense that we talk about being, you know, the 3 most critical things in our business. And you guys, you know, are not alone. Every single, you know, I think 99% of businesses would be in the same boat, that they're unable to track and measure these things that are the most critical. So if we can't do that, we're not always held accountable in terms of these numbers and where we got to go. So that's where I was trying to help people through focusing on that type of stuff. So I spoke a little bit about dashboards and putting this stuff, you know, in our face at the right times. This here is a little bit of a wagon wheel, and if I we can group things that are important. So for myself, I'm looking at retail sales. I like to track the auto pay revenues. I like to track profitability, attendance over here on the left, and membership. So inside that, I can split it up. So with retail sales, I can go gym, food, drink sales, supplements, and so forth. And I can set different KPIs. So you'll see the crosses are where for a period of time, I didn't hit those KPIs that I set, those targets. Auto pay revenue. So I've got my total auto pay revenue, say per month, that I want to hit. I can see I didn't hit it. I want to reduce the number of suspended auto pays. I can see that I had too many that had to be suspended. Declined auto pays is another big one for a conventional gym. Number of suspended, approved auto pays. Yeah, so there's a whole range of things. And what this really does, just puts it in my face. So we can have this feeding in from most softwares that people are on. But what it does, it highlights, okay, retail sales were down. I can have a little bit of a further deep dive into why they were down. And it may be just looking to track against how I compared this time last year. Overall, I may look at a graph on monthly sales for the last 6 months to see if there's a distinct decline, and then start looking at what I've got to do to change that. But it makes sense. So this is the type of stuff that we can put in front of people to really, those things that matter, the things you wrote down, you could have them listed around the outside here. Another one, we talk about profitability. We talk about cash flow being the biggest killer. From your accounting software, I can grab this type of data. And what we're looking at is understanding in a business per month, per quarter, per year, what's your break even point? What do you guys need to bring in to make sure that you guys make a profit? Or more importantly, what do you need to bring in to make sure that what you're doing is worthwhile and that we're not just doing it for the sake of doing it, putting stress on ourselves and taking time away from family. So this diagram here tells me that I need $18,820 in this example to make a profit. Okay, that's my break even point. For this period, I hit 23,000. Okay, and my total costs ended up at 19,105. Now there's some variable costs there, which would be obviously with my supplement sales and so forth. So I can see I've got a margin of safety of $4,814. Knowing this number, the break even, is where people really, I guess, want to understand where they're at. So for a gym, for a CrossFit gym, personal trainers, I guess once you know your costs, including your own time, that's where people forget about it. You know, if we're running as a sole trader, running as a partnership, we may not be taking a wage out of these numbers we're looking at, but we need to be paid for what we do. So we want to factor that in, and then really understand what I need to make it worthwhile. Quite often in our industry, one of the luxuries we got is direct debits. So the bread and butter for most gyms is like, can I get my direct debits to do that for me? What type of numbers do I need to get to that number? And then on top of that, my other sales can really be that extra cream. So, you know, if we can get our goals of direct debits to be that break even point, to be the mark we want to be to over and above that break even, then the rest can be cream, you know. So I know that all sounds easy in the scheme of things, but once we understand those numbers, we can start making decisions to really get to that point. Cool. Any questions on that? Does it make sense where we're sort of looking at numbers a little bit different in a business? And most of us talk to an accountant at the end of the year, we'll see a set of financial statements, you'll see a profit or a loss down the bottom, but we really don't get what have we got to be selling, what have we need in members to make this worthwhile for us on an ongoing basis. And that's where we look at it a little bit differently. And once again, talking about end of financial year, we might see our financial statements, see a profit, think where the hell did that cash go? Because I know it's not in the bank account. And then your accountant's probably going to tell you, oh, by the way, you got a tax bill or GST bill and so forth. So we all of a sudden think, what the hell are we doing? Are we going forward? Are we going backwards? This graph, this diagram here just shows the green being the revenue and the red being the expenses. So having a look in this period, 23,000 worth of revenue, 1,400 was worth of cost of sales. So products like fit aid, shirts and so forth. The rest was my general expenses through the business. I had some other income come in, drove it back this way, and then you know, accounts payable movement and so forth. So in a nutshell, what you're looking at there is, did it come out as drawings? Did I pay off some debt? Did I pay extra wages because someone was on annual leave? So there's different things you want to look at to see, okay, what was the cash movement? We can have a look at every day of the week, our financial statements, but understanding where our cash went. And, you know, if people are pulling out drawings for the sake of it and money's going in different directions, it may actually not be pushing their business in the right direction. So I can see that type of stuff. So when someone comes to me and says, gee, I feel cash strapped, but I've seen their debt levels reduced by a significant amount, then I feel okay and I can talk to them about it. If I don't see that and they've pulled it out as drawings and gone on extra holidays and all the rest of it, I can also see that and be able to talk them through. Well, in this year, yes, you don't have cash in the hand, but you went over to America, you went here, there, you bought a boat and so forth. It's just, you know, giving some context around what they're telling me. Okay.
All right, context. Which of you are on a boat? Oh, Matt, of course you do. Never mind. My bad.
I'll confess to that. That was how I had to justify where the cash went. And once again, we spoke a little bit about our auto pay rev. So if we're wanting to track this, a different way of displaying it quite simply here, the graph is showing what I actually hit in auto pay rev for a period of time. And I've got my dotted line being the target. So as we set a target, every month we can check in to see, are we on cue? And, the target may get us to that sweet spot I spoke about in profitability. It may be beyond that, but this gives you an indication on the direction it's moving. I quite often like to have a look at auto pay against previous years because it's, I might get spooked here seeing August, September, October on the decline. But if I compare it to last year, was there a bigger decline last year? Am I above or below? So I'll also bring in previous year's data to see where we're tracking. It may just be a seasonal thing to see where that's at. We had spoke a little bit about check-ins, keeping our members active. So the other thing I noticed too is I can map trends between people checking into the gym or checking into classes versus say supplement sales. So, as I get into September, October, I can start to see a bit of an incline as check-ins go north, so do my supplement sales. So there's a whole bunch of benefits. Obviously, the more we got coming is not just the more people we got engaged, but understanding that other sales and other growth can happen because of it. The other thing too is that if I look at graphs of check-ins starting to decline, it's sometimes quite often a delayed effect before my revenue declines, if that makes sense. So as the check-ins start to decrease over time, my rev may still be there. They may still be signed on as direct debits and so forth. But what I see down the track is that in 1 or 2 months' time, that's when my revenue starts to hurt. So it's like, okay, check-ins are down. What have I got to do to increase the I'd call it check-ins for a conventional gym. I guess it's attendance at classes for CrossFit gyms, but it's understanding those numbers before my revenue starts to hurt. Okay, makes sense. Any questions so far just on this type of stuff? They're probably graphs you haven't seen. It's not, we all know that data is there, but it's being able to use it in the right fashion.
Can I ask a question?
Go for it.
If you could jump back to the auto pay screen quickly. Obviously something that I'm actually, sorry, let me restart that question again. Something I've recently chatted to a few gyms about is in regards to how their billing strategies are resulting in their current membership levels. And I've heard everything from we track it in a book and invoice it after the week it's done based on attendance to we offer a single membership type and that's it and that's for everyone.
Yeah.
How would you say, or how important rather would you say that it is to know or have people on auto pay as opposed to other types of payment types? So things like pay as you go or prepayment for class access, like a 10-pack pass or something like that.
Yeah.
What would you recommend in your position based on your experiences, like financially from your professional experience as well as your gym ownership experience to that?
The auto pays are critical for me for both the CrossFit and the gym. Every time you got to ask someone to pay a bill or pull money out of their pocket to pay you, it's hard. Quite often we don't feel comfortable always asking people for money either. So it's like, well, here's a contract. This is what you're engaging in. Generally an auto pay rev compared to upfront, people are getting a cheaper price for that. And we're okay with that because we know on a down week that they're not there, that direct debit will still roll over. So we get the benefit of consistency. And yeah, the pain point is that I know with gyms, so if a gym has to change software or if a gym has to, is bought out, one of the critical things we look at with a transition is making sure that there is the least amount of disruption with people's direct debits. Because the pain point is the first time people sign on, and provided you're, providing a good service with these people, you've got them forever. And that's where it then becomes, our focus comes on retention and check-ins. But the moment we got to keep asking people for that money, that revenue, that's when they're likely to drop off. The other thing I find too, so what you'll find with a conventional gym, attendance, total attendance to people paying direct debits is a lot lower than a CrossFit gym. So most people paying more for the CrossFit style of stuff, then there's that big comparison. So we'll have a lot of people where our attendance is low, they're still paying a direct debit. Psychologically, for them, they got two decisions. One is to ring the gym and cancel their direct debit if they're not using it, or one is to get off the couch and come back to the gym. So they're more inclined to know that, yes, I should be.
I might propose as a third option, that's to ignore both at the start and just pretend it doesn't exist. And I feel like a lot of people have had a 24-hour membership at some point where they've just kept doing that for a bit too.
Yeah, for sure. And the other thing I like to do too is not have end dates. So let them roll. So the contract will just keep rolling. With CrossFit, normally it's a no locking contract. That's all well and good. With the gym side of things, we will we'll lock people in for a price if they to go 6 months or 12 months, but we make them contracts continue to roll. So we don't have to re-sign those people. If we're running sales, we'll also make sure that they may get a sale price for 6 months, but after that, they go back onto the new contract. The moment you've got to re-sign people, that's when we look to lose out. Yeah, so definitely critical to any business, and I think most of us would feel the same. Yeah, on all accords. PTs with personal trainers, it's a funny one. Some people see both sides of the equation. If ongoing members that you work in with consistently can get on a direct debit, then it does make things nice and smooth. You don't have to be chasing up or invoicing people 2 or 3 weeks at a time. If someone misses 1 or 2 weeks and you got to bill 3 weeks in one hit, sometimes they get a little bit spooked about what they're paying. Whereas the direct debit has that sort of dribble out as such. So yeah, a couple of different ways to look at it.
Give you a little tidbit of some data we've pulled recently from fitbox gyms, for example. And of all of our payments that are scheduled payments, these would all be considered auto pay. Across all of the gyms that we work with, on average, only 2% of payments actually fail.
Yeah,
so
right.
It is a very consistent indication of cash flow.
Yeah. And, sometimes with gyms, we will, if we've got to pay a transaction fee, so if a gym's paying a transaction fee, they might be inclined to go per fortnight rather than per week. But a lot of them, for cash flow reasons, will still pay the extra fee to get weekly. And it also means less are actually bouncing, which is interesting. So say it's $1 per transaction that people pay for a fee. They may still go weekly, for the sake of lower amounts are less likely to be bounced back, which was interesting as well. But you'd be surprised how many people do operate their life just on that last dollar. It's crazy, especially when you look at your conventional gyms where you've got a couple hundred members floating through. Those numbers can blow out for sure in terms of direct debit failures.
Not to jump into the session too much, sorry, it's just struck something else in my brain as well. With that being the case, do you think that there is a strength for a gym to be offering a variable billing cycle for a member based on trying to avoid failed payments? So for example, if I get paid on a Tuesday, Matt gets paid on a Friday, is it of more benefit overall, would you say, to allow the member to choose that?
Yeah, for sure. For sure. It's funny that if you can get that out of someone where they say, I get paid on Tuesdays, and if you can line it up, the day after, yeah, it does make it smooth, because it's not until before that they're looking at where their money's going. And then if you're not a critical service to them, you might be the first thing they flick. So yeah, that's definitely one little secret that most people don't focus on. But if you can make your billing cycle for that person sit there, then that definitely helps as well, for sure. Cool. So quick exercise, we're nearly done. I just once again want to tailor the session to get you guys thinking about how we can make changes within your own business. So it won't take too long, but first thing I want you guys to do now, there was a handout, not sure if you got it, you can just scribble this on a piece of paper if you don't, is step one, consider where you are today. So pick out something within the business that defines where you are today, whether that be the number of active members, whether that be the number of total members, or whether that be total revenue per month, something like that. If it's a personal thing, and it might be just, work-life, could be work-life balance. I'm spending too much time in the business. Let's jot that down quickly. And the next thing I want you to do just above it is almost this diagram is where you want that to get to. So if you're at 100 members and you want to get to 150, write that up the top. If it's, extra revenue, one extra cash flow. Belinda needs extra cash flow to buy Matt the new boat. What do you got to get to?
Maybe it's a bigger boat.
Bigger boat, yep. More fuel.
It's fuel for everyone right now. Let's be real, guys.
It's all for the business anyway.
We
Yeah,
have,
Keaton, I need to chat to you about my tax return at some point.
Sounds good.
we have
Right, we got them too. Oh, sorry, Matt.
We have some commentary, but we're just keeping quiet. Yeah.
No, jump in. I'm here for the entertainment, guys.
So from there, let's go on both sides. On the left-hand side, I want you to start writing what would drive you there to get to that. So in the business, what changes could you be making right now, or in the next, 6 to 12 months that's going to get you there? So once again, if we're talking about extra members, is that advertising? Is that sales? Is that bringing on new trainers to handle the extra load? Is it looking at a new premises? Let's make a list of a few things to get you thinking on what type of things would get you to where we need to be. And then last ones, pull me up if I'm going too quick. On the other side, I want you to think about all the things that are stopping you from getting there. Is it not enough time? Is it, not the right employees, not the right skill set? Is it your software? What type of things? Is it your space? Is it, what type of things are actually stopping you from getting there or going to hold you back over time? Cool. Anyone want to broadly share? Perfectly fine if it's specific to yourself and you don't want to share, but is there any broad observations or broad things that you guys would want to share or speak of? About yourself and Sean?
yeah, I can only talk about, what happened a year ago when we had our place.
Yeah.
So we were growing kind of at the rate we wanted to grow. So we had 120 adult members. We have every term we start off school term with 60 to 80 teens and kids as well. So in terms of growth, we were ticking all those boxes. If anything, we were saying we needed to, just get more new adult members. So obviously the way CrossFit, and I'm assuming everyone does the same thing as us, is that you have legacy pricing as well. So it's always good to get a new member who's going to be pretty much paying your new rack rate.
Yeah.
And so our kind of metric was to try and hit 2 new members a month.
Yeah.
That'd be great. So, our churn wasn't massive. So the beauty of CrossFit is once they're in, pretty much unless they move out of the country, they're here for life. So that's kind of where we're at. The reason we kind of capped our so let's look at, you talked about drivers. So we looked at marketing, social media engagement. It was working out really quite nicely. So our We spent a bit of money back when Fitbox did their, and they were linked in with the website, so they had the, our SEO optimization was working well, so we were getting new inquiries. Our restraint was actually doing the intake. So what makes our conversion rate, up at 95% is that myself or my wife would do our intakes.
Yeah.
Our coaches do the coaching. We look after membership engagement. And so because of that, really our restraint is when I had the time to get into the gym to do an intake.
Yeah.
So that's me. I don't know if that's a unique case, but yeah, that's how we kind of operate. For us moving forward into the new premises, our biggest drive is going to try and make sure we get, something like 60% of our old members is a kind of our mark to try and get them all back.
Yeah.
60% of the members back.
Yeah, perfect. There's actually strong numbers out there, even for an existing gym that hasn't closed down, in the chance of re-signing a past member or a member that's expired compared to a new member. So definitely give you some confidence around those numbers.
I'm relatively confident. Like we've stayed engaged with pretty much all our members through socials or just walking past them at a coffee shop. So
Good.
I know that we're going to get a lot of them back. So
yeah, perfect. And I think, like any new setup, and like I showed you some of those graphs, when a new takeover happens or someone sets up, there's that confidence on outside that those members that we need to capture as well. So that's awesome.
Yeah.
Fantastic. So we won't take too much more time. Matt, was there anything you wanted to share or that got you thinking, I guess, a bit more directly to your scenario?
Yeah, I mean, mine's at the moment, time is the main restraint.
Yeah.
So subcontract is kind of the way that I have to go.
Yeah.
But then, it's the restraint of time that then it's the paradox, right? So I need to spend more time putting into people. And like I said, because I'm kind of a specialty service, it's hard to get anybody that kind of fits where I'm particularly at.
Yes.
That being said, though, I'm happy. Like, I train people up all the time, so I'm happy to train somebody to get to the same kind of level. But because people are generally coming and seeing me for the specialty, it's hard to, like I say, just kind of offset that straight away. Finding a subcontractor to then allow the extra flow, because I'm just limited by the amount of sessions I can do per day, and which is then also limiting the growth of the actual business, because the adage of you can't work on your business if you're working in your business is more and more true every single day. Just trying to find somebody else to then fill some of that boots on ground work, so that I can go do the other stuff I need to do.
Yeah, perfect. That's awesome. It's your case might feel a little bit different, but it's very similar to every business, in the sense that for a CrossFit gym, we're working on so much floor space, so much equipment, so much floor space where we're limited to. So it's maximizing the revenue on that floor space. And obviously hours in a day for yourself. Like you said, you can't spread yourself out. So your limiting factor is the number of sessions. And the other thing that a CrossFit affiliate would relate to you is exactly the time thing. And so how do we automate those things that aren't driving my top line? How do I do it in a fashion so yourself, one PT in that hour compared to you spending an hour or 2 hours or 3 hours on your books or something else? What type of things could you shift off to allow you to drive that top line in stuff that's more valuable? And I spoke a little bit about myself. I don't do the wages, I don't do any of my book work, my BAS is all the rest, even though obviously in my profession I'd know how to do that. It's purely exactly what you're talking about, trying to focus on what matters there. And finally, Belinda, have you got much to share in terms of what you guys thought of?
Pretty similar to what's been said already. I'd love to get more new members in at a higher price. And a major constraints are time, absolutely time. And then I guess employees on that too. We have a lot of contractors as well that just coach as a passion. They've got their own day jobs and things like that. So, while they love CrossFit and love the box, their focus isn't on the business side. So,
That's right. Awesome. I can definitely relate to those things for sure. And it's how we obviously coordinate all those things in. And I think the biggest thing I've got with talking to you guys is something I'm well aware of, is that no one will run our business like we do. You know, we all know you'll walk through your gym, there'll be a piece of paper on the ground. You could have, you know, 2 employees walk past it 10 times in that day. You'll be the one that picks it up. You know, we see things that others don't, and it's critical that we have the time to do what matters. And yeah, and like I said, and it may be just the time to coach our staff, that little bit extra to pick up that piece of paper next time they walk, or, you know, do it in a way that's we can coach them to help us free up time as well. Cool, fantastic. Joel, are you online? Was there anything you wanted to? Oh, I spoke to you. We're all good there. Cool. So basically that's pretty well wraps it up. And I guess I just wanted you guys to have a quick look at this one, which is something that I guess the way I treat advice different to, say, most accountants, in the sense of the 2 things here on the left, bottom left. So picture this as a picture frame. Bottom left, I've got value. Top right, I've got vision. And so when I'm talking with you guys, obviously today, or when I'm talking with a client, the 2 things I need to understand and get you guys talking about and thinking about is exactly what are your values? What do you value in business? What do you value in life? And what's your vision over that period of time? So to give you an example, you might go into your accountant, and if they've got the blinkers on and all they want to do for you is save taxes, that might be putting money into a company, putting money into super, but your actual values and vision was that in the next 3 to 5 years, you wanted to buy that, or go back to the boat, or you wanted to go on that holiday, but we've tied up money for certain reasons in places, or done certain things in our planning that is going to stop us from doing what we want to do. Then to me, understanding the vision and value is way more important than trying to save that dollar of tax now, or do something from that, you know, the general strategy that an accountant might do. So I'm not saying tax isn't important. I'm not saying, you know, save every dollar. But what I'm saying is, if we're giving advice or talking to you, we need to tailor where you go and what you do based on that. So I may get someone that says, I might say, look, this is your tax bill for this year. Next year is going to look the same, and so forth. It's good for, I could say to them, let's put this money here, there, save, you know, 20 grand worth of tax. But that, if I don't get the full picture, that may be stopping them from going on the family holidays, may be stopping them from doing the things they want to do in life. So as we talk and as I work further with you, and hopefully you guys take the opportunity up to have a one-on-one consult where we can have a bit of a further deep dive individually into your circumstances, and I can help you get some direction, or help you think of what type of KPIs would be valuable, and how you can go about certain things. This is basically the picture I look at in a nutshell. Choosing the lifestyle I guess you want, and rejigging those numbers to get it there for you. From here, using this project to I guess make these changes. There's 2 surveys. One was the business satisfaction survey. One was the business transition survey. They should be all up on your portal. If you don't have access to them, let us know. What we're chasing is, before the one-on-one consult that I'd love you guys to take up, fill those out, send them through to me. They basically start to give me this picture for you guys. And then when we chat, even if it's just very general, I can tailor stuff towards this picture, and have a bit further understanding of exactly where you guys want to go. So that's basically the session in a nutshell. Hopefully in the session itself, you guys got thinking about stuff you don't always think about within your business specifically. Are there any questions, observations, things that you thought of today that you haven't, or things that you knew are important but you probably haven't had the time to sit down and talk about it? Linda and Matt.
Curious to know, are you driving your numbers out of your accounting numbers software or out of the gym software?
Definitely both. So the accounting software gives me probably more of an indication on cash flow purely before, so actual cash in and out of the bank, because my accounting software is where I look at the bank account itself as being reconciled. So the money that's transferred in that I've got access to and the money going out happens at that point. But so I need that data for exactly cash flow, where my expenses and so forth. A lot of the times, if people are entering bills in, you can see what your creditors are and so forth by your accounting software. What that doesn't give me is obviously what your point of sale does. So a good point of sale software is where we can get the data on direct debits, cancellations, what the trend is in terms of revenue bought by a direct debit versus supplement sales, all of that. So they're two key at this stage. They're both just as important to me. If I were to solely look at an accounting software for a gym, there's not a lot of advice you can give just on the accounting software. And on the flip side, a point of sale software, depending what they're using, can be quite painful if it's not giving us that right data. So to me at this stage, both critical. Some of those graphs that I showed you, we sort of use a dashboard for people to bring the information from both into it and then display it from that sense. So yeah, both, critical at this stage. Does that make sense?
Yeah. Second question for you, specifically in the CrossFit sector, it seems that generically most sales are done reactively. Guy walks into the gym or somebody inquires through online. Have you had much success with promotions, and if so, what sort of experience have you had with that?
Yeah, so probably more that where we get bang for buck is on the conventional gym side when we run promotions. And to me, it's more so the people that are just looking for a gym membership, 24-hour access, come in. So when we run a sale for that, that's when we get bang for buck. With a CrossFit type gym, where we seem to get bang for buck is like intro class. So people's biggest fear is, even though you might think price and it potentially could be upfront, but a lot of the biggest fear with coming to a CrossFit affiliate is actually being nervous about going to train with these super fit guys that are going to be looking at them. And we all know that they're only worried about not dying themselves, so they're not. So it's how do we bring people to that? So promotions, like I guess bring a friend on a Saturday for free, or offer promotions possibly to your existing members to bring people along. We find we get bang for buck there, or intro classes. So I ran, and my affiliate itself's definitely not massive, because predominantly we've always just been the conventional gym side of things. And the conventional gym also had like the fitness style classes. So CrossFit's fairly new in the town. Where I've got bang for buck in promotions is running like a 6-week or a 4-week first timers CrossFit intro and fundamentals type class. Whether that's at a discounted rate or what, but it was people going there because they knew they were with other first timers, if that makes sense. Do you guys feel the biggest fear is that fear of walking into somewhere new for a lot of people that have never done CrossFit before?
Yeah, I think so. Yeah, definitely.
And the other thing too, can't remember, might have been someone mentioned before, might have been you, Joel, or Inshan, is that retention is good. So retention in our industry is pretty good. So it also means that if we're trying for existing members, then it could be a hard sell to get them across, or we could be doing a lot of work for something that's hard to get across. Now, I'm not saying don't get existing members to your gym, but where are we sort of focusing our attention? So sometimes bringing in new people to the game is exactly where it's at. And another one just to talk about is when I originally bought the gym I did in town, I looked at both gyms because both ended up being for sale as I spoke to them. And one had a model of, you know, your super fit people, really promoted, you know, the afternoons were really big with people finish work, come in, get out of their work clothes, lift heavy and so forth. The other one didn't actually have too many coming in the afternoons, but was big on seniors, was big on ladies, was big on, so it's finding that market of what works. And so with a CrossFit affiliate, that, you know, it's good to have your super fit athletes, but focusing in on making people feel comfortable is where we do get a lot of bang for buck in terms of new members, if that makes sense.
I think it's like what you've suggested is actually a great idea. I've written it down on the, you know, basically having an introduction class just with newcomers.
Yeah.
What's also key, I think Belinda and Matt, would be just to make sure, like, the one thing that intro classes would have is that because they're all newcomers, if they're very quiet, they're not going to get that community feel. So it's all like, it's that,
Yes.
fine line you got to walk, right? You really want them to.
Exactly.
That's been my worry with intro sessions. We offer a 1 week free trial now for new members to come in.
Yeah.
And, you know, we thought about going down the line of, yes, you have to do your intro session, all that kind of stuff first, but we want them to get a feel for the community.
Yeah.
Yes.
And we sort of found that trying to offer an intro course, we couldn't get a group of people all together at the same time. So that, it just sort of never sort of worked for us, but yeah.
I wonder if you could do something to meet those two goals to a closer point. So if you have like a normal 8 o'clock class on a Saturday, do your intro session at 7. So then at the tail end of that, they capture that moment of the community, for example. I wonder if there would be much success or before or after a usual scheduled class.
Yeah.
It works. It's still the atmosphere of actually, you know, having low numbers in a class that you know, once you lose that atmosphere, it loses that feel. What you said, Belinda, in terms of people coming on, if people have approached and they're ready to come into the class, I'm kind of definitely I'm on your terms there, is that if they're willing to come through, I'm okay if I've got to coach, you know, one new person through with other people. If they've approached and they're comfortable, I'm okay with that. I think it works well than trying to wait for that 3 or 4, you know, intro classes, delaying them through. But yes, then it's like, well, how do we go and capture these people that are too scared to come to that point in the first instance? And I've run, and this is where these type of discussions are good. And when I work with other gyms, I get a feel for what's worked for them, what hasn't. So when I give advice to, you know, some of the things I'm talking about now haven't been just myself. They're like other gyms I work with, they give me feedback on what's worked and what hasn't. So what we're doing today is fantastic because we get a feel for it. But I too have run intro classes where the numbers haven't stacked up, you lose the atmosphere. And I've also had intro classes where I get you know, a substantial number, and the number that then fit, you know, they leave saying that was awesome, I'm coming next week, and then the drop off between those, say, 10 people that commit to them actually coming to their first class is crazy. You know, it's like, okay, where have I got wrong? So what have I got to do to retain that once I do get that foot through the door? And you know, once again, it's time, because if I had the time and the right processes in place, you'd be able to message them to see how they pulled up. You'd be able to give them a call or spend a little bit of time beside them during the session to make them feel comfortable and not lost, you know. But we're all 100 mile an hour everywhere. It's about spending that time where it needs to be spent. Cool. Any other questions?
Nothing here.
That's fine. But yeah, like I said, more than welcome. Love you guys to take up the opportunity for the one-on-one where we can get down a little bit more to the nitty and gritty of our own business. But overall, hopefully today got you thinking a little bit about the business, ways that you can improve it. And yeah, other than that, let's hope for no more lockdowns and we can all push forward in the right direction.
Yeah, 100%. Completely agreed. Awesome. Thank you, Keenan. Always always interesting to hear from you. And I tell you what, I learn something every time I listen to you, which is great. And it always makes me think about things in the way that we do business. So that's super helpful as well. Guys, if you still have a little bit of time left, I might stop Keenan screen sharing here and actually screen share myself and quickly throw you through the portal and make sure that everyone's comfortable with how and what to access through the portal now. This is something that we are enforcing this cohort. I know Belle, sorry, and Scott, if you're still here. We previously were sending out links because there were some issues with the portal, but it is quite essential that we are using the portal to access these resources around how this project is structured. Being a Queensland government project, it's like a reporting requirement for us. So what I might quickly do, guys, is share up my screen with you. We should hopefully now be able to see this. And someone just give me a thumbs up if that's okay. Yay, thanks, Belle. All right, cool. So academy.fitboxcorp.com is how you get into the portal. Very easy. So your login information, if I put login here, for you guys will be your first name followed by your last initial. So if I was Belle, it would be Belinda B. Simple as that. And Sean, I know we're having issues with you, so I'm going to reset your profile. So that will be fine. So first thing you need to do, enter in your username, or you can also use your email address that you registered with for the Academy, because that was used to create your profiles. Now I'm just going to jump in. I've got a dummy user profile here as a participant. If you click remember me, it should keep you logged in this browser. So you won't need to log in each time. So once you are logged in, you'll just see the pages like this. Your login button will turn to log out. So that's how you know you have been logged into the portal. So to access the Academy content, really where you need to go is clicking on the modules button up the top here. And then what you'll see is these are all of our sessions that are stepped out for the coming weeks. So we've got session 1, which was last week, session 2, and then you can see each date that the following week's sessions will be releasing that information to you. So if I want to access any of the session content, so today, for example, what I would do is click into session 2 here. You'll see the screen change slightly. And now we have this different view over here where I can click through each of the modules, sorry, each of the topics within module 2. So session 2, number 1, gives us an overview of what this week is looking to focus on. Here's our content. Here's our wonderful coach, Keenan, how amazing he was. And then you can scroll down here to see either these topics here or the topics are here. Now, what you need to do as you progress through this module work is to ensure that you're ticking off these modules as complete. Otherwise, you won't be able to progress in the week's sessions. So if I click on to Zoom webinar here, what I should be able to see here is like session 2. And if I click join, it's going to be quite funny. It actually lets me jump into 2 places at once. There you go. So it's telling me I'm already using my camera, but that jumps me straight in. So if you're being asked for a password, you're not using the portal, because this shouldn't ask you for a password. The password is built into the way the video is embedded.
Well, mine did. It asked me for a password.
All right, I can remove that from here. Yeah, it's very weird. I don't know why it's doing that, because I've just been able to jump in. And now it's a Hannahception. Great. So I don't want to full screen that. What am I doing? Oh my goodness, Hannah. What you can see at the bottom of each of these topic pages is there's a little mark complete button here. So that's how each of your sections will be ticked off. And you'll go through and you'll do your one-to-one business review with Keenan. Now there's 2 surveys that Keenan mentioned today to do before you attend your one-on-one. Will live in our resources, and your resources, oh, there you go. Until you've ticked off the prior one, we can't actually access this content. So I'll go through here and say that I've completed that booking. And now I can see the resources for this week's session. So here's our slides from today. If you want to grab the copy of those that Keenan's used, and those 2 surveys that he's mentioned as well. So there's a resources section under the session for each week. So any of the extra resources that the coaches provide or things that they recommend you guys have a look at, I'll include there for you to go see later. You can always go back in time and review anything we've done in previous weeks as well. And then you'll see that down here, for example, I can't access session 3 because it doesn't get released till Monday. Are there any questions around accessing any of that, how that works, apart from you and Shannon will reset you afterwards? We're pretty good, pretty silent. Cool. Okay, awesome. Now, if you want to review this webinar as well, where this little Zoom login is under session 2, once this meeting is complete, I will then change this to the uploaded version of the replay. So if you do want to watch any of the sessions from previous weeks throughout this time, you can always go back and refer to them from those. For example, if I jump into session 1, our welcome session, you'll see here's our replay from last week. If you need to refer at any time to that, you can jump into there too. Now, while I've got you guys, I forgot to mention at the top of the session, and my apologies, we're running a little bit over time already. Now, our session 5, which is our session that will be hosted by Jason Khalifa, I need to let you guys know that this will actually be held on a Tuesday of that week, not the Wednesday. The same time, but it will be Tuesday, I believe it's the 12th. So I will send that out to you also an email, and I'll get a pop-up on the Academy portal so that you guys get reminded of this too. But just be aware that it won't be happening on the Wednesday of that week, but the Tuesday instead. We want to make sure you guys get access to that because obviously it's a pretty highly demanded one. If you are speaking to anyone else who is registered who hasn't attended their prior sessions, they will not be permitted access to that session. So there will not be any jumping in for a single session in that case. So if they are keen to get involved, they are welcome to come back, review the prior content, and join the sessions leading up to that. Simples. I shall let you guys go if there's nothing else that we need. Inshan, please stay on for me and I will get you sorted. Awesome. Thanks, Joel.
Thank you.
Too easy. Thank you so much, guys. See you soon. See you next week.